Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, and good evening, wherever you are in your corner of the world. Gibraltar updates distributed ledger guidance to match the FATF crypto rules. And the Gibraltar Financial Services Commission, the GFSC, has updated its guidance notes for DLT providers. The regulator announced Thursday. The amended guidance now includes clarity on token issuances and recommendations for risk management. And again, as always with every video, the links will be available in the description below if you want to learn more of the specific details involved with that. On the next article, SWIFT outlines strategy to expand beyond financial messaging. The interbank payment network SWIFT is set to expand beyond pure play financial messaging to offer member banks a range of transaction management services. Operating over a 2-year time frame, the new strategy is aimed at enabling financial institutions to deliver instant and frictionless end-to-end transactions. And it's going to be exciting to see who they end up using for that specifically, if not multiple options, in making this goal a reality. And we will follow that closely as we've discussed this since last year and shown a great deal of content involved with that. Next article, Argentina's new dollar tax is boon for cryptocurrency. In the next few articles, we're going to discuss that. Argentina has imposed a new 35% tax on all purchases made in the USD, and this move could send Argentines flocking to stablecoins such as DAI, whose trading volume spiked on the news. And there will be other options as well. The Argentina Central Bank can't keep with the country's demand for USD, and to combat this, the country has imposed a new 35% tax on purchases made in dollars. And as a result, Argentines may seek out dollar alternatives in stablecoins such as DAI, whose volume and price spiked yesterday on local exchanges. And you can see why the stablecoins are going to pretty much explode, and they continue to push these additional taxes so that it kind of forces people into the new financial system. Similar to the issue at hand that is making the actual cash fiat currencies around the globe too dirty to touch. In the next article, banks in England could soon charge you to hold your cash. Now, similar to the previous, you're getting additional taxes and charges pushing you out of these currencies into the new digital financial system. A monetary policy that includes a negative interest rate would mean that the Bank of England would charge those that lend it money. In brief, the Bank of England is considering a negative interest rate. This may mean that banks in the UK would charge customers to hold their cash. The initiative is supposed to encourage spending and improve its economy. On top of that, again, it's going to push people into the new digital assets. Alibaba on track to be the largest blockchain patent holder by the end of 2020, the study shows. So Alibaba is on track to supersede the U.S. computer giant IBM as the single largest holder of blockchain-related patents, according to a new study. And again, IBM, we find it always connected to Stellar as we have for our investment. We obviously know it connects back to Linux and Hyperledger, etc. But that's not something as digital asset investors that we can initially invest in. The next article, BRD's enterprise banking blockchain boosted by new compliance strategy. The crypto wallet provider BRD partners with CipherTrace and Chainalysis and others to boost its banking enterprise solution. And Chainalysis is definitely making its rounds in recent news articles. In July this year, the OCC granted permission for federally chartered banks to provide custody services for cryptocurrency. And while significant, the need for enterprise-grade infrastructure to securely deploy custody solutions has become crucial. And that's where a lot of people are wondering, is that going to be connected to PolySign? And as we've shown recently, we have exchanges like Kraken who have become digital asset banks or crypto banks. And the future, wondering if that's something that, other exchanges like Coinbase will get into, Binance will get into, or will even Ripple get into. That is the conversation floating around the community. So Adrian Tricani, the CEO of Mateco, a technology partner for institutions entering the digital asset ecosystem, mentioned in a report published by Cointelegraph, PwC, and CVVC that the institutional adoption of custody solutions for managing digital assets has clearly entered a new phase. Greater regulatory clarity on digital assets in many jurisdictions, as well as adoption by large global institutions such as Libra and PayPal, are highlighting the need for trusted, secure, and flexible infrastructure to manage such assets. And in the next article, by 2024, the EU will put in place a comprehensive framework on DLT and crypto assets. And in my opinion, I don't think it's going to take that long, because I believe as you see the progression of this year speeding up, and by the end of 2021, we hit the, as in 2021, the next bull run begins. So that's going to definitely put a little flame in their momentum. Members of the European Union have decided to make use of DLT and adopt crypto assets such as stablecoins by 2024 in order to introduce new regulations to make cross-border payments cheaper and quicker, according to 2 EU documents received by Reuters today. According to this report, this move from the European Commission was a strategy to encourage greater use of digital finance, especially as the issue at hand, related lockdowns, increased cashless payments. The documents also stated that physical and online purchases were currently dominated by card payment schemes, and that 78% of payments in the Eurozone were in cash. Moreover, the EU planned to make instant payment systems the new normal by the end of 2021, and the EU document stated by 2024, the EU should put in place a comprehensive framework enabling the uptake of distributed ledger technology, DLT, and crypto assets in the financial sector. It should also address the risk associated with these technologies by 2024, and the principle of passporting and a one-stop shop licensing should apply in all areas which hold strong potential for digital finance. And to add on to, the distributed ledger technology, remember that they're going to need to be ISO 20022 compliant as well. And I want to thank @XRP Crypto Wolf again for sending content. The next article, Philippine Central Bank embraces the digital tokens, and they see the digital tokens as a means to reduce the use of fiat money and improve the delivery of financial services in the country, even as the country is still studying its own digital currency. And speaking to Bloomberg, Philippine Central Bank Bangko Sentral de NG Filipinas, or BSP, Governor Benjamin Diokno said digital tokens expand reach and lessen the cost of financial services, as well as reduce the use of fiat money. Diokno said digital tokens improve how the central bank provides financial services to citizens, and the Philippines is one of the countries studying the launch of its own digital currency. The BSP has said its study will look at the feasibility of and potential policy implications of a central bank digital currency, or CBDC. The country had already launched a blockchain-powered platform to distribute government-issued bonds. And I'm going to leave you with a final thought. If opportunity doesn't knock, build a door. And remember, guys, this is not financial advice. It's for entertainment purposes only. Much love to each and every one of you. And again, I want to say a quick thanks to all of you who have been retweeting. I've noticed that it's increased over on Twitter. Much thanks to each and every one of you. You're greatly appreciated. All right, guys, have a great day, and we'll catch you in the next one.